For more on our top line story, the elections and the markets, joining us now is Diana Avigdor, portfolio manager and head of trading at Barometer Capital Management. Hi, Diana. Good to be with you today. Thank you very much. I know it's busy. There's earnings, and there's, of course, this overhang of the U.S. election. Talk to us a little bit about how you're looking at the U.S. election and what it might be doing to your strategy today.
Right. So as of last Friday, the market decided to start pricing in the election possibility of a Trump win. As many guessed, the market is a little nervous at that prospect. From my perspective, I think that it's an opportunity. When we look at the earnings have been okay. Now, what really does happen if Trump does win? One of your guests said that we're going to have a very tough Wednesday, and I agree with that. However, unless you're a very short-term trader and you're able to go all cash and then buy it all back, all you're going to do is pay a lot of commissions, like some Brexit traders have probably done. We've had a big surprise. Market sharply went lower and then quite quickly recovered. Trump election, people, I think, will eventually come to terms with, given that the power to change things, his power to change things is not even as high as maybe Hillary's power to change things once they get into power. However, the earnings have been okay. 85% of S&P have reported with slight surprise, and about 40% of Canadian earnings have surprised, both on revenue and on earnings on average, depending on which sectors you're looking at. So I think that people are in leveraging down mode. And we've had a little bit of surprise in the, the very successful sector, the digital media and technology in the U.S. in terms of guidance. And I think that helps to kind of put a little bit of pressure, so that's an excuse to take some profits.
What about, though, the guidance that we're hearing from some of the company managements? What's your read there?
I think that they're trying to be and setting up for a little bit of conservatism. I think that also, for example, Facebook talked about 2017 being an investment year for them. So that's not necessarily a bad thing. That generally translates into longer term positive performance. I think that we have a seasonally strong fourth quarter coming in. But I think that the next week or so, and maybe the next 3% or so in the indices, will determine, say, a bit of a longer-term direction. So what I'm saying is that we're going to be scraping along the markets here, volatile up and down, not really sure how much more to price in. Another 3% on the index would not surprise me on the downside. But then we'll have to see how volatile the V dip might be if there is a Trump election. I think that this is an opportunity to pick up stocks into what's seasonally a fourth quarter that's supposed to be fairly strong for most companies.
Seasonality aside, or fourth quarter seasonality aside, if in fact we get that V drop, if it's a Trump victory, if that's what the market does, do you buy on that dip, not necessarily just for the fourth quarter seasonality trade, but for 2017, Diana? Because I think a lot of people really are nervous about 2017 because of the guidance, and also because if it is a Trump victory, what will he do longer term?
Well, and you're absolutely right. There are so many concerns, and this is the reason why cash levels are high, leverage levels are low. So the worries are not unwarranted. We are invested for cyclical growth. It doesn't look like, I know economic data in the U.S. has been mixed. European economic data has been positive. Earnings have been slightly positive. People are not that invested. This tends not to be the setup for a recession.
Right.
This tends not to be the setup for a major market sell-off like 2008, let's say. So we bump along the volatility. And both candidates, both Hillary Clinton and Donald Trump, and everybody in the world actually, is talking about infrastructure spending and fiscal stimulus, and what do we do with this monetary stimulus that brought us to zero rates, and so many billions of dollars are invested in negative rates, and look what it's doing. It's not doing. So why don't we talk about what the government can do to help us now?
Finally.
So both of them will be investing, sorry.
Right. No, finally, after all these years, everybody's been knowing that we needed some fiscal policy help and we haven't been getting it. But now, after seeing these negative interest rates, the impact that that's going to have or having and the unintended consequences, now we're actually starting to get some movement maybe on fiscal policy, at least here in Canada. But what I'm hearing from you, Diana, is you think that this is going to take hold more so, even more so globally, that we will see maybe a new move of fiscal policy, infrastructure spending. Is that what you're essentially investing into right now? I'm not saying infrastructure plays, but that we will actually see much better growth?
I do think that there is going to be much better growth. Look, at zero interest rates have punished the savers in an attempt to tell the saver, look, don't save because you're not getting anything, so why don't you go out and spend? But that didn't happen because the demographic situation is not such that they can do that. So instead of spending, you just need to save more if you're not making money on your money. So it created an opposite effect. As rates go up, if you're somebody who has to buy an annuity, let's say, that annuity now costs you a lot less. The discretionary income that an increase in rate actually loosens up right now, from the perspective of here is an X amount of money for my retirement, and now it's returning X amount, so I don't need to keep back so much. You know, I think that that is not a negative. And also, if there is some kind of visibility forward in terms of government regulation, spending, and direction, I think the corporates will also be able to take some of their cash hoardings and invest in the business. And so if that happens, and I'm talking about a year, 2, 3, if that happens, then at some point the buybacks that these companies are doing of their stocks are going to go back to being perceived as negative, and they're going to have to put it back into their business. But we're talking much, much farther than where we are in the next week in the election.
Next week.
Next week.
Next week. All right, Diana, nice to see you. Thank you very much.
Thank you for having me.